Let me ask you something. If I offered you a business, a legitimate, legal, global, accessible business where you had only a 10% chance of success and a 90% chance of losing your entire investment, would you take that deal? Would you? Most rational people will say no immediately without hesitation, and yet every single day hundreds of thousands of ordinary people around the world walk around voluntarily into exactly that scenario. They open trading accounts, they deposit hard-earned money, some of them borrow money, some of them use their savings, some of them use money they can't afford to lose. And the overwhelming majority of them, around 80%, will lose that money. Another 10% will spend years grinding, struggling, barely break even, wondering why it was not working, convinced that the next strategy, the next indicator, the next course will finally be the one that changes everything. And only 10%, roughly 1 in 10, will go on to trade consistently, profitably, and sustainably. So the question I want to explore with you today in full honesty, with no hype, no promises, and no shortcuts is this: why? Why does this keep happening? Why do so many intelligent, motivated, hardworking people fail in this industry? And what separates the 10% who succeed from the 90% who don't? My name is Imran. Welcome to TradeX, and today we are going to have an honest conversation that this industry rarely has. Let us start with something so obvious that it sounds almost too simple to say. Think about the people you trust most in your life. Your doctor, your accountant, the engineer who designed the bridge you cross every morning, the pharmacist who dispenses your medication, the pilot flying the aircraft carrying your family. How long did it take them to earn the right to do what they do? To become a doctor in most countries, you spend 10 to 15 years in formal education and training. Medical school, internships, residency, examinations, licensing boards, supervised practice under senior physicians before you ever permitted to make an independent decision about a patient's life. The financial investment alone can run into hundreds of thousands of dollars. The time investment spans the better part of a decade. And this is considered normal, this is considered necessary, because the stakes are high. An engineer spends 4 to 5 years at university, followed by practical training, professional examinations, and in many countries, a licensed probationary period before they are permitted to sign off on a structural design. Because if they get it wrong, people die. Even a software engineer in a field of that is relatively accessible and self-teachable typically spends years studying, building projects, contributing to code bases, failing, learning from those failures, and slowly earning credibility before a serious company trusts them with the critical system. Even a professional artist, someone who works in what many people dismiss as a normal technical field, typically trains for years. They study technique, they study history, they build a portfolio, they receive critique, they practice thousands of hours before they produce work that the market will pay a premium for. I could go on. The pattern is the same across every field. No education, no credential, no practice, no profession. This is the accepted reality of virtually every skilled discipline in the world. Now you ask yourself, Why do we treat trading differently? Nobody wakes up on a Tuesday morning and decides to perform open heart surgery. Nobody watches a few YouTube videos and starts designing skyscrapers. Nobody does a weekend course and begins flying commercial aircraft. And yet, every single day, people watch a few videos, buy a cheap course, open a brokerage account, deposit money, and expect to compete in one of the most complex, fast moving, institutionally dominated financial markets in the world, competing with the supercomputers, super machines. And then they are surprised when it does not work. Before we go further, I want to make sure you fully understand the scale of what retail traders are stepping into. The global foreign exchange market alone, the Forex market, processes more than $7 trillion in transactions every single day. This is not a typo. 7 trillion every day. When you include equities, bonds, commodities, derivatives, and other financial instruments, the full scope of global financial market is almost incomprehensible in scale. Who are the dominant participants in these markets? Central banks, governments, sovereign wealth funds, hedge funds managing tens of billions of dollars, global investment banks, proprietary trading firms employing teams of mathematicians, programmers, and data scientists working around the clock. These institutions have resources, technology, data, and risk management infrastructure that no retail trader can match. They have algorithmic systems executing thousands of trades per second. They have direct market access. They have relationship with liquidity providers that most retail traders don't even know exist. This is the arena that average retail trader enters, armed with a laptop, a $500 deposit, and a strategy they found on YouTube. I'm not saying this to discourage you. I'm saying this because understanding the environment you are entering is the first and most important step towards surviving in it. And yet, despite all of this, most countries do not teach trading in schools. Most universities do not offer structured, practical trading education. Most financial regulators focus on disclosure rather than genuine trader development. Most brokerage firms, with notable exceptions, are financially incentivized in ways that do not always align with the retail trader's success. The result is a generation of retail participants who are entering a multi-trillion-dollar professional market completely and often dangerously underprepared. Let me tell you a story. It is not one person's story. It is the story of tens of thousands of traders around the world. Someone, let us call him Ahmed, discovers trading online. Maybe he sees a video, maybe a friend mentions it, maybe he sees an advertisement. He is told that the market is accessible, that you can trade from home, that you don't need a degree, that the people are making money from their phones. Ahmed is curious. He is intelligent. He is motivated. He watches hours of YouTube content. He joins a Telegram group. He buys an indicator. He reads about a strategy. He opens a demo account and it works. He makes virtual profit. He feels confident. He opens a live account. He deposits $500. Month 1, he makes profit. He is excited. He tells a friend. He deposits more. Month 2, he makes profit again. Now he's genuinely believing in himself. He thinks he understands the market. Month 3, a losing streak begins. Maybe the market conditions change. Maybe he starts taking larger positions because he is feeling confident. Maybe he stops following the rules he set for himself. Maybe he chases a loss, convinced he can recover it quickly. And then, in a matter of days, the profit from 1 month and the month 2 are gone. And so is portion of his original capital. He does not understand what happened. The strategy was working. Nothing changed. Why is the market suddenly against him? Here is what actually happened. Ahmed was never trading with skill. He was trading with luck. In a market that happened to be trending in a direction that made his entries look correct. When conditions changed, his lack of genuine edge was exposed immediately. He had no structured risk management, no fixed percentage of capital per trade, no defined maximum drawdown limit, no predetermined exit rules that be followed with discipline. He had no understanding of market cycles. The fact that what works in a trending market will fail. The fact that works in a trending market will fail in a ranging market and vice versa. He had no trading journal, no record of his trades, his reasoning, his emotional state, his mistakes. Without a journal, you can't learn them. You repeat the same errors indefinitely. And perhaps more critically, he had unrealistic expectations. He expected consistent profit quickly. When the market didn't cooperate, he panicked. And panic in trading is catastrophic. Ahmed's story does not end with month 3. Most traders in this situation do one of 3 things. They quit, they try again with a new strategy and repeat the same cycle. And this is the most dangerous outcome. They deposit more money, convince themselves they simply need another chance and accelerate their losses. Does any part of this story sound familiar? Now I want to talk about something that I believe is one of the most significant contributing factors to retail trading losses. And it lives in your phone, in your feed, in the content you consume every time you open a social media platform. You have seen it, we all have. The video that promises a 100% win rate strategy. The secret indicator that the banks do not want you to know about. The trader who turned $1,000 into $100,000 in 3 months. The 5-minute technique that apparently removes all risk from the market. The screenshot of a trade so perfectly timed that it looks almost supernatural. Let me explain something important about why this content exists and why it should be viewed with extreme caution. If 100 traders all take the same trade and 30 of them make a profit, those 30 people will create content about that trade. The 70 who lost will make videos about their losses. What you see on social media is curated highlight reel, not a representative of sample of outcomes. A creator can show you 10 winning trades in a row, but they may not show you. And what you should always ask about is what happened to the account overall. What were the losses between those wins? What was the drawdown? What was the actual percentage return over a full year? Trading on a demo account involves no risk, no real emotions, and no real slippage. Back-tested strategies are fitted to historical data. They often perform beautifully on paper and collapse entirely in live market conditions. These distinctions are rarely communicated clearly to the viewer. Here is something that I want to think about carefully. Many trading content creators earn their primary income not from trading but from YouTube advertising revenue, course sales, referral commissions from brokerages, sponsorship deals, and affiliate marketing. This is not a criticism. Content creation is a legitimate business, but you must understand the incentive structure. A creator who earns commission every time someone clicks their broker link and deposits money has a financial incentive to anchor deposits, regardless of whether the viewer is prepared to trade. A creator who sells a $500 course has a financial incentive to make you believe the course will solve your problem, regardless of whether it will. I want to be transparent with you. My channel is not monetized. I receive no commission from deposits. I do not sell overpriced courses promising guaranteed result. My incentive is simple. I want to produce content that is genuinely useful. If that takes time to build an audience, so be it. But the broader point stands. Always ask who benefits from this content and how. I want to give you a proper, honest, structured breakdown of why most retail traders fail. Not a surface level list, a genuine examination of each factor. Trading is treated as hobby or a side hustle rather than a professional discipline. Most traders begin without studying market microstructure, order flow, price action theory, macroeconomics fundamentals, or the mechanics of the instruments they are trading. You would not perform surgery without anatomy. You can't trade without market literacy. There is a critical difference between consuming content and undergoing structured training. Reading articles, watching YouTube videos, and joining Telegram groups is the equivalent of reading books about swimming without ever getting into the water under the guidance of a coach. Structured training requires a framework, feedback, accountability, and progressive challenge. This is, in my experience, the single most common cause of account destruction. Risk management is not optional in trading, it is the entire foundation. Without it, a string of losses will wipe out any account, regardless of how good the strategy is. A professional trader thinks first about how much they can lose and only then about how much they can gain. Leverage is one of the most powerful tools available to retail traders and one of the most dangerous. When used correctly, leverage amplifies returns. When used without discipline, it amplifies losses at a speed that leaves no time to react. Many retail traders use leverage far beyond what their account size and risk tolerance can support, and the consequences are severe and swift. Fear and greed are the two most destructive forces in traders' psychology. Fear causes premature exits, closing winning trades too early because you are afraid the profit will disappear. Greed causes overextension, holding losing positions too long, hoping the market will reverse. Both are products of trading without a clear, rule-based plan. The market does not care about your emotions. It will not reverse because you need it to. The expectations of turning $1,000 into $10,000 in 3 months is not a trading plan. It's a fantasy. Professional fund managers who consistently return 20 to 30% annually are considered extraordinary performers. Retail traders who expect to double their accounts monthly are not setting targets. They are setting themselves up for reckless risk taking that will inevitably destroy their capital. Blind deference to any single authority in trading is dangerous. Every trader's strategy, risk profile, and psychology is unique. What works for one person in one market condition may be entirely inappropriate for another. The ability to evaluate, question, and adapt is a prerequisite for long-term survival in this market. A trading journal is not a luxury, it is a professional necessity. Without recording your trades, your reasoning, your emotional state, your entry and exit criteria, and the outcome of each trade, you have no data from which to learn. You are flying blind. Every professional trader I have ever known who succeeded long term maintains a meticulous journal. A strategy is only valuable if it has a proven statistical edge over a sufficient large sample of trades. Not over 10 trades, not over 1 month, over hundreds of documented trades in varied market conditions. Without this data, you are not trading a strategy, you are gambling on a feeling. Trading is a journey measured in years, not weeks. Without a structured development plan that outlines where you are, where you want to be, and the specific milestones you need to achieve to get there, most traders drift aimlessly from strategy to strategy, never building the cumulative depth of knowledge that consistent profitability requires. I want to address something that comes up frequently in trading communities: the question of brokerage business model and how they relate to retail trader outcomes. There are two primary brokerage models: A book and B book. In an A book model, the broker passes your trades directly to the open market or a liquidity provider. Their revenue comes from the spread or a small commission. In this model, the broker's interest is largely aligned with yours. They want you to trade frequently, which means they want you to survive and grow your account. In a B book model, the broker takes the other side of your trade internally. This means that when you lose, the broker profits directly. This is not illegal. It is a disclosed business model used by many retail brokers globally. But it does create a structural tension that traders should understand. I'm not suggesting that all B-book brokers are acting against their clients' interests. Many operate with full regulatory compliance and genuine service commitments. But the incentive structure is different, and an informed trader should be aware of it. The broader point is this: educated traders are significantly harder to exploit than uneducated ones. A trader who understands risk management, who does not overtrade, who does not blow their account on emotional decisions, and who builds a genuine edge over time, that trader is valuable to any broker regardless of their model, because they generate sustained transactions volume. The solution is not to distrust all brokers. The solution is to understand the environment you are operating in and to protect yourself through knowledge, discipline, and preparation. So we have talked extensively about the problem. Now let us talk about the solution. My core belief, and this is the something I feel strongly enough to dedicate a significant portion of my life to communicating, is this: trading should be treated like every other profession, and that means the pathway to profitability must be structured, progressive, and patient. Here is what a responsible development pathway looks like. Before you deposit a single dollar, Invest in your understanding of the market. Study price action, study market structure, understand the economic forces that drive asset prices. Learn the vocabulary of the industry, not because it sounds impressive, but because without it, you will not understand what is happening in front of you. Deepen your contextual knowledge. Understand how different instruments behave. Understand the role of institutional participants, central bank policy, seasonal patterns, and market sessions. The market is not random, but its logic requires time and study to perceive clarity. Before you take a single live trade, define your risk parameters. How much of your account are you willing to risk per trade? What is your maximum daily loss limit? What is your drawdown threshold? These are not theoretical questions. They are the structural foundations of a sustainable trading operation. Without them, everything else is irrelevant. Practice your strategy on a demo account, not to make the virtual money, but to build process discipline. Can you follow your rule consistently? Can you execute your plan without emotional deviation? Demo trading is not about results, it's about building habits. When you are consistently profitable on demo over a meaningful sample, hundreds of trades, transition to a small live account, not because the money matters yet, but because live trading introduces a psychological dimension that demo trading cannot replicate. The presence of real risk changes your decision making. You need to experience and manage that. Document everything, every trade, every decision, every emotional state. Build a performance record that gives you a real data about what is working and what is not. Your journal is your evidence base, and evidence is the only thing that separates disciplined trading from educated gambling. Only when your tracked performance demonstrates genuine, consistent, risk-adjusted returns over a sustained period should consider scaling your capital. Scaling without a verified edge is simply risking more money in a losing operation. Scaling with a verified edge is how sustainable wealth is built in this market. This pathway is not glamorous. It does not go viral. It does not make for exciting short form content. But it is the pathway that the 10% who succeed actually walk. So, who are the traders who make it? What is different about them? In my years of trading, mentoring, and studying this industry, I have observed consistent patterns in the traders who achieve lasting profitability. They are not necessarily the most intelligent people. They are not always the most talented. They do not always have the best strategies. But they share certain characteristics that the 90% do not. They study seriously for a long time, not a weekend, not a month, years. They treat the market like a discipline worthy of deep academic respect. They practice before they risk. They understand that skill is built through repetition and feedback, not through financial exposure to an underdeveloped approach. They understand probability. They do not expect every trade to win. They build strategies with the positive expected value over large samples, and they have the psychological resilience to accept losses as a normal cost of doing business. They manage risk above all else. The first question before every trade is, what is my maximum loss? Not how much can I make. They focus on process over outcome. A bad outcome from a good process is not a failure. It is a natural part of probabilistic trading. A good outcome from a bad process is not success, it is luck that will eventually run out. They think in years, not weeks. They are not trying to get rich by next month. They are trying to build a compounding edge and that grows steadily over time. They preserve capital above all else. They understand that as long as their account exists, they have the opportunity to continue learning and improving. Once the account is gone, the lesson comes too late. Compare these qualities to any other high performing professional discipline in the world. The surgeon who pauses before every procedure to review the patient's chart. The engineer who stress tests before signing off on a design. The pilot who completes a pre-flight checklist before every single departure, regardless of how many thousands of hours they have logged. Success comes from preparation, not from talent, not from luck, from preparation. Before I close, I want to say something directly, not as an educator, not as a trader, but as a person who has spent years observing the damage that this industry can inflict on people who were never properly prepared for it. My channel is not focused on selling dreams. I am not here to show you a screenshot of a winning trade and imply that you can replicate it without the years of work that preceded it. I am not here to promise overnight wealth or a lifetime financial freedom in exchange of a course fee. My channel is not monetized. I earn nothing from your clicks, your views, or your deposits without any broker. I may not understand social media algorithms the way professional content creators do. I may not have the production quality of larger channel. I may not have millions of subscribers. But my commitment to you is simple and non-negotiable. To share honest, realistic, and genuinely useful content that helps people avoid the costly mistakes that I have seen destroy financial lives. If this channel helps even 1% approach trading with the seriousness and preparation it demands rather than the recklessness that social media encourages, then every hour I have invested in creating this content has been worthwhile. So let me leave you with this. Trading is not gambling, but it becomes gambling the moment you enter without preparation. Trading is not a shortcut to financial independence, but it can become a legitimate, sustainable profession for those who treat it as one. Trading is not easy money. Nothing worth building ever is. Trading is a profession, and every profession demands education, practice, discipline, and time. The market does not owe you a return on your investment. It owes you nothing. What it offers to those who are prepared is the opportunity to complete on a level where skill, discipline, and consistent execution can compound into meaningful long-term results. But opportunity is not guaranteed. It is only available to those who have done the work to be ready for it. So I leave you with this final thought. Do not invest money you cannot afford to lose. Not in trading, not in any speculative asset. Not until you have genuinely developed the knowledge and the skill to manage that risk responsibly. Do not trade without proper education, not because I say so, but because the evidence of what happens when you do is overwhelming, documented, and heartbreaking. Treat trading like a business because it is one. It has costs, it has risks, it has competitors, and it requires a serious plan to make it work. Treat yourself like a professional, because that is what this market demands for everyone who wants to survive in it long enough to succeed. I hope this video has successfully conveyed what it set out to say. If it has given you even one new perspective, if it has made you pause and reconsider even one assumption you held about this industry, then it has served its purpose entirely. Thank you for your time. Thank you for your patience, and thank you for the trust you place in this channel every time you choose to watch. Stay safe, stay disciplined, stay blessed.